What's up, what's going on, guys? Welcome back to my channel. Hope you are good. All right, so I want to share a trade with you guys. I have already done the work right here in this channel. What I'll be doing more now is just to share with you guys my entry before, after, whether it's hit TP, it's hit stop loss, using all the things I've taught you guys here. Simple stuff right here. All right, so I'm already in this trade. This is a USD card. We closed in profit last week, Friday or Saturday, I think. Thursday. We actually caught this movement about 100 and something pips right here. So now again, it seems like we are going to be shorting. Okay, it seems like we're going to be going short on this again. So why actually do I even enter this trade, or why do I think it will sell? So if you look, I have some of my lines here. This is a trend line coming from kind of long. You can see from here, this is just like a channel. Okay, so you can see the first touch, second touch, the price is here again. So it's expected that the price should at least touch here, maybe touch here, but not all the time. Like what I taught you guys, that you don't see this as just a line, is an area. So if the price must not touch here, because you didn't put the lines with the price, so the price is independent. So if you are, some people might be waiting, because Kingsley said you have to wait for the price to come to your level, to your trend line or support or resistance, and now you see the price close to this point, the price started ranging, showing you a signal, and you'll be waiting for the price to touch here. So it's not a must that the price will touch here. So I'm looking at the price dropping to the downside, and I actually took a risk entry right here, using this bearish engulfing candle. You can see this particular bearish candle, it engulfs 1 2, so it's a powerful candlestick right here. So that's exactly why I entered. But if I want to be more conservative, I could have allowed the price to break this zone. Do you know why? The price could actually range more inside this particular level. Okay, the price can actually keep ranging here, go back again, range, okay, before break to the downside, up to the upside. All right, so that is exactly why I say that this is a bit of aggressive entry right here. But I actually entered using this candlestick. Remember, I told you guys I don't usually enter my trade on 15 minutes time frame using candlesticks, right? I actually use chart patterns on 15 minutes time frame. Now if you look at what is happening right now, okay, the best place to enter this trade is if the price should break these two lines. Now this line right here is just, this one is just like a support line, or where the price have been ranging. Okay, if the price break out from this range then and break my trend line, this trend line is coming from down, you can see this trend line right here, it's coming from this. If the price should break it and close below it, that's the perfect point. So what I did is to enter a risk entry right now using engulfing candlestick pattern right there, bearish engulfing. Then I'm going to scale in trade once the price break this zone. That's exactly how I plan to take this trade. So once the price break here, I'm going to be making more entries right here. Okay, I actually dropped this on the short section of my channel before I start creating this video, because I drop it as a signal so that those who actually watch the short video can actually take the trade. So that's exactly what I do in my short. I told you guys I will be calling out trades in that short video. So every day I think it's okay if you come check out the short videos and see if there's any signal that I call out. Take the trade with me, leave a comment on how the trade maybe go. If it is a profitable trade, you drop it there also. If you lost or hit stop loss, you also drop it there. It actually helped me keep track of what is going on and every other stuff right there. So now there's something you guys need to know. So for the fact that now we actually see this as that the price is like going to sell to the downside, and I'm already in this trade. Okay, I'm already in this trade, just few pips into profit. But now there's something I need to bring to your awareness. Okay, now if you are looking at price action, let's say that the price is actually trending to the downside. Okay, let's say that the price is pushing to the downside. Okay, and at this zone you want to sell, at this zone, let's say you decided to sell maybe because of the price coming to this zone, which you can actually say is a flip zone, right? Now for the fact you are selling here, there is something you need to consider. Now you with your flip zone strategy and swing strategy, anything like that, trending strategy, the price is likely going to drop, right? You are selling at the zone, stop loss there, TP to any level. Now there's something you need to consider. The price is the price don't just respect your analysis all the time. So trading is a game of probabilities. So you don't just stack in trades each time you enter maybe making your first entry. You need to understand that this price can actually go against you. Even after seeing all these things, even after seeing your setup, sometimes the price will still go against you, and that's why risk management comes into play. That's why you putting stop loss comes into play. So if the price go against you, you already know, okay, I am willing to risk a certain amount of money or risk certain pips for this trade, right? So that's why you have this level as your stop loss level, okay, so that once the price comes to that level, your trade will be closed. You will just take in the little loss because you are targeting big. Now because of this, having it in mind that the price can actually go against you, you now have alternative. Okay, this is the possible stuff that what can actually happen on this trade. Okay, the price will probably drop, but you have to ask yourself a question: what if the price did not drop? What if the price decided to create a double bottom right here after pushing into profit, create double bottom, okay, at that zone, and decide from there to push up, okay, maybe come down, retest this zone and go? Now if you shrink, you can actually see this as head and shoulders pattern at this zone. Okay, what if the price do something like that, give you head and shoulders pattern, then boom to the upside and maybe to this level, or even break it and keep pushing up, right? So that's the question you ask yourself. But understanding this, okay, understanding this will help you always manage your risk properly, because if you don't look at the downside of any trade you are entering, you are likely not going to see the need to always set your stop loss or calculate what you are risking. You get the point? So it's not about you seeing your setup and taking trade. You also think, what if the price go against me? Am I willing to risk this number of pips that I set my stop? You can actually set your stop loss and you still blow your account, or you still lose money, because you set your stop loss without calculating the amount that you are risking at that moment in time or at that point in time. That means you might open your account and you discover that you have already lost more than 20% of your account, or 10% of your account, or even 50% of your account, which is wrong, right? So that's why you need to understanding that the price must not go in your favor will now keep you in this cycle of management. Okay, understanding risk management, then you'll be able to apply proper risk management, control your risk, and check the amount you are risking per trade. Now the same thing is what I'm actually going to be explaining here. Okay, now that we are in profit, now that it seems like the price is going to break, now that it seems that the price is going to do well, good and fine, the price is now selling. This is a live trade. You can see the price is pushing down impulsively, probably might break here and keep going. But we have to also check the downside. As in the downside, what if the price did not actually respect this analysis? The price decided to reverse and keep going up, because if you look closely, the price is actually forming something like bullish continuation pattern. This is a bullish flag, right? The price actually push up from here to this level. Okay, let me just increase this, then decided to create a flag. That is exactly what the price is doing right now. Then after this flag, what are we expecting? Boom, to the upside. That's another way you can actually look at this trade. The price can actually create a bullish flag at this point and boom, sell to the upside. So if you now understand that you have another, you look at the trade, the two sides of the trade. Okay, what are the selling signal, what are the buying signal, which one do we have this edge? Okay, and that's the question you might be asking now. Now that I know that this is a very bullish continuation pattern forming right here, okay, why am I selling? Does it mean that this selling is giving me an edge over buying? And the answer is yes, right? So why is it that I think that the price should sell more than, like, instead of buying? Remember, sell instead of buying means that it can actually buy, but I have this my setup, okay, giving me kind of more reasons to that this price will sell than to buy. And remember, those reasons might not be the best or might not actually change whatever the price will do. So why I think the price is going to sell instead of buying, even seeing bearish continuation pattern, bullish continuation pattern, which is set a buying signal right here to the upside, okay, is that I actually trace back what the price have been doing. The price have a kind of from here, after this ranging, spike up and hit this level the first time, hit this level the second time, and the price is back again here at this level. So I'm thinking, for the fact that the price is touching 1 2 3 at this zone, the price is likely going to sell more to this level. And if I go to a higher time frame, the trend is a selling market. This is a selling market on a higher time frame. Okay, so if you look at this on a higher time frame, you know, I have a lot of lines here. I don't like my chart this way. You can actually see that this price is dropping, okay, to the downside. So we are likely going to have more of selling than buying. So that's exactly what I actually look at. Okay, I put in these two consideration into a scale, and I look at the one that have more probability of likely going to be playing out well, okay, before I actually take my trade. Now if you look here, look at exactly what I'm saying. You can see that this candlestick closes inside here, so the candlestick did not close outside. That means we are not scaling in yet, because the price can actually range inside here. That's why I told you guys that this entry is a risk entry with just candlestick, right? Is a risk entry, but if you want to be conservative enough, you want to actually make the best entry, is after this breakout. Okay, is after this particular breakout right here. So if the price should break this point, that's the point I'm going to be entering my trade, like with confidence, right, that we are likely going to push more to the downside, right? So I'm going to be waiting for the price to hit this one, and maybe that is a breakout from here. Maybe I will bring back the updates on this trade during the day. So guys, what's going on? Welcome back. So I started to bring you back the outcome of this trade, okay, and what I did next. Okay, so you know, I explained everything about this trade, and I also described something I call the possible and probable, and I was able to pick the one that have the higher probability trade setup of playing out. So you already know I'm targeting the price to drop, okay, and I also give you like kind of forecasting that the price can actually we have the higher probability of the price dropping to the downside than to the upside because of our long trending market. So that is trend line right here. Okay, so instead of just focusing on this bearish continuation pattern, which is just like bullish okay, bullish continuation pattern, which is just like a bullish flag, instead of focusing on it, we should be selling, because we have our trend line, and this is a downtrend anyways, you know, on a higher time frame. Okay, and the trend line, this is the third touch of this trend line from up here. Okay, this is the third touch. Okay, we have the first touch up, then this is the second touch, and we're expecting that this should be the third touch. And we know that we don't actually take this as just a line but an area. So once the price start reacting at this zone, we have to enter, and that's exactly why I feel like, okay, this price is going to sell more than buying. Okay, as in, that's why exactly the reason why I actually entered the trade. Okay, so now I told you guys that this is a risk entry. Okay, I told you guys already, if you already watched the video before now, because this is just the outcome of the trade that I want to share with you guys. Okay, so now I entered this trade right here. Okay, and this is a kind of risk entry. I told you guys, once the price break my trend line, okay, which is this line, I'm going to make more entry. That's when I'll be comfortable, right? Because the price have a kind of you can see this trend line. Okay, once the price break out from this trend line, I'm going to enter more trade. That's where I'm going to scale in. That's where I'm going to be entering comfortably. Okay, but this one is for risk entry and, you know, aggressive trade. I want to make entry here even before the price breakout. But you know, when you are making this kind of entry, you don't need to enter with a huge loss size. You need to, because you already know that there is no confirmation yet, just that you want to enter earlier, like you want to make more money, right? Because when you enter on time, you make more money, but you are likely going to be losing out a lot of trades, right? So, but sometimes I do enter my trade that way, okay, aggressively that way. Okay, so let's see how the price played out. So now the price started, you know, pushing up. Our stop loss is still secured, okay, after this retest. Yeah, so our this thing is still secured. So let's see what the price does next. The price push up again, okay, then boom, a stop loss triggered. So I lose out on this trade, guys. Yeah, the price actually triggered my stop loss and kind of seems to respect the bullish continuation pattern to hit the trend line, right? That's exactly what the price did. So I lose out on this trade, and yeah, and I'm not regretting it, because I actually entered with a lower loss size, because I already know that this is not confirmed. I could have waited for the price to break here. So what is the lesson I learned from this trade, and why am I even bringing this to you guys? For you to know that not all the trades, forget the analysis, no matter anything you do, some trade will still go wrong. You might not be seeing what others are seeing, right? And that is exactly why the trade will go wrong, because not everything that other people are seeing, you might be just focused. Like now I'm focusing on the price selling. The price can actually buy. The price can actually buy instead of selling, as I proposed or as I predicted, right? And that's why risk management is very important. So what is the lesson here? The lesson is that I should develop I should be more patient. I know I have that attitude, right? I've been patient. I'm a patient trader. Like, but sometimes I try entering my trade like that, catching that sniper entry, or you know, trying to get in on time. But one thing I know is that anytime I'm trying to do that, I reduce my risk. That is my lot size, just to, because I know I'm going to be entering more trades after the confirmation. That is the breakout, right? So the first thing, first lesson I am learning from this trade is that I should always be patient. Wait for the confirmation, wait for the breakout, okay, before you enter the trade. I know if you enter on time, you are going to make more money, but if you are patient, you are likely not going to be losing a lot of trades. Okay, that's the first lesson. Then the second lesson I learned on this trade is that for the fact you have this higher probability of this trade setup playing out, doesn't mean that the trade must go your way. So you must have it at the back of your mind that this trade can actually go against me, and all these things is going to be, you know, keeping you conscious of how much you are risking, no matter the analysis you do. Okay, most time what you are targeting is that you should be making more money than you are losing, but you should know that some of the trade you are going to be losing. So once you understand that actually this trade can actually go against me, then you'll be conscious of the risk you are taking or the loss size you are using. All right, so what happens again? What is the next thing to do? Now the trade have triggered our stop loss. What are we going to do? Should we close in anger and just go and sleep and say, okay, we are done for today? No, the price triggered our stop loss. Remember, I risked low. The place I supposed to have set my stop loss is above my trend line, but because I know I made an aggressive entry here, the only thing I have to do is to tighten my stop loss, right? Because I don't want to lose more money, right? I don't want to lose more. So because I have not seen the major confirmation I'm waiting for, which is the breakout. Okay, so are we going to close our chart and go when we lose trade? That's the next thing you need to learn in this particular video. when the price hits your stop loss, you shouldn't close your phone or your laptop or desktop or anything you are using and go. You should also monitor the trade. What is the trade doing again? The price can actually give you another opportunity to make your money back. You know, a lot of us are used to this. Once we lose money, we are tired of trading, we close the charts, we just go. We could not actually pay at, or we just run to another pair instead of focusing on the pair first that hit our stop loss to see if we can actually see another opportunity to make entry again. So what happened is that once my stop loss was hit, then I quietly observe, check out what is wrong with the trade, and if I actually see nothing wrong with the trade is still nice, even though my stop loss was kind of triggered. So I actually keep watching to see if I'm going to see another opportunity. Now the price is here, the price hits the trend line and start dropping down. So there's nothing that will make me enter this trade here, even though the price is touching my trend line, exactly what I want, and the third touch, everything is on point. But I will not be entering this trade. One, I've lost trade here, so I don't want to enter any trade aggressively again. I want more confirmation before I enter my trade again. So instead of just entering, oh, the price is now at my trend line, this is the time to enter the trade, sometimes it will end up in tears. So the best thing is to always wait for confirmation. I needed more confirmation, I needed more confluence for me to enter this trade, right? At least I need this my trend line to be broken first. It's more, the price should break down my trend line, then I will start looking for another confluence to enter. Because I've lost this trade, what I'm going to be looking for is two things. I want to see the price, okay, break this trend line first. Okay, the price should break this trend line, and if possible break this consolidation here. The price should break this consolidation here if possible. Okay, then if the price go lower than this consolidation, I will just wait for a little bit of pullback. The pullback mustn't come here, okay, before I enter my trade. Okay, so let's see what the price does next. Then the price actually push up. Now you see what I'm talking about. So if you enter the trade, your trade right here, thinking, okay, this is a trend line, this could be another loss, okay, something you could have avoided, or because you are so conscious of that line, forgetting that you just lost the trade. Okay, you needed more confirmation to enter your trade right now. Okay, so this could be a losing trade if you enter here again. Okay, so the price keep going, sorry. So right now, remember I said the first thing I'm going to be waiting for is for this price to break this trend line. That's the major. Then after it, I will now start looking for another confluence, right? So I'm not entering my trade again just like that because I've lost a trade. So when I lose a trade, what I do also, if I lose a trade, I try my best to make sure that the next one is a profitable one. Okay, but it's not a must. I can actually enter a trade and lose 3 times, 4 times, or that, but it's very rare for me to lose 3 times in a row or something like that. So I will always try to confirm my trade just to recover the previous trade I lost. Okay, so now let's see what the price is also doing. Now this is what I'm looking for. The price have actually broken this my trend line. Okay, the price have clearly shown me a sign, okay, of pushing more to the downside, and I said if the price should clear this low again, I'll be more like, it will be more easier for me. Or even though the price have cleared this low, okay, and also cleared this low, but I wish the price could have also do the same job right here, and I'll be so happy to enter my trade at any pullback again. But let's just watch and see what actually happened and how I actually made my money back. Okay, now you see the price could not break this, so that's exactly the reason why I might not actually be entering. I did not enter the trade. Okay, the price have not break at this zone. It break out from here but could not clear this low, so I'm now looking for another confluence. Assuming the price break this low and give me a little pullback, I'm going to be entering my trade. I'm going to be going short. The whole concept is that we are shorting, we are going short on this trade. But where are we entering? Now the price have cleared our trend line. I wanted the price to clear this low for me to wait for a pullback, okay, but the price could not clear this low, so I needed to be more patient again to see another confluence. Okay, now we'll play and see what the price does next. Okay, look at what I entered the trade. I wanted to pause this. Okay, look at what happened and how I actually made entry. Now the price could not break this my low at this point, right? So what I did is I was just waiting for another confluence, and when the price push up, okay, and created a double top right there, that is exactly what happened. So when the price created a double top, I already am now taking the double after the breakout. It's just like a break and retest, and the double top is happening at the same point of break and retest. You guys know what I mean by break and retest. So let's say the price, this is a trend line, okay, and you are waiting for the price to break your trend line. You know, the price might be doing anything from here, and at a point it breaks, then retest your trend line. What are you going to be doing? This is another good setup that you guys need to, you know, take advantage of, that I'm sharing now. Now you are going to be selling at retest. Okay, now it will be more profitable. It will be more profitable if the retest at the same time is giving you a pattern, and that's exactly what happened there. Okay, now what I mean is, now let's say that you had this, the price, you know, pushing this way, and at the end of the day the price started to break and retest this zone, right? So as the price is retesting that zone, this is a break and retest strategy. The price break, retest, and at the same point is giving you double top. At the same point of retest, the price is giving you double top. So why on earth are you not going to sell this, right? So that is exactly what happened here. The price break my trend line and retest, and at that point of retest, the price is giving me double top, which is a reversal pattern, a selling signal, and I sold. If you look there, I actually used this indecision candlestick that formed there, which is a reversal pattern, okay, with the candlestick pattern. That indecision, after that I waited for my bearish engulfing, boom, at the close I entered my trade, right? So I made some pips. What happened is that I did not make a lot of money out of this trade, okay, because of break even, okay, because when the price pushed down, I actually shifted my stop loss. Okay, that's how I actually managed this trade. I shifted my stop because I've lost trade already. Okay, I'm conscious of that. So when I lose trade, I'm always conscious of that I lost the previous trade. I should be more careful, but it doesn't mean that it will prevent the losses if the losses will come, right? But just for you to reduce risk. So what I did is, when the price pushed down a bit, I lock in my profit, as I closed, as I push my price, my stop loss to break even. Okay, I break even into the trade. That is shifting my stop loss to my entry point. All right, so, and I decided to hold the trade. Okay, what happened is that the price actually spiked down. Okay, after this spike to the downside, the price pushed back and closed my trade at break even. I don't know whether you guys get this now. So what it means is that the price pushed into profit. How many pips? I think 71 pips into profit. Okay, then because I already know that I lose out the first trade, okay, then what I did is to drag my stop loss to break even. Okay, and after that the price pushed into profit 70 pips and return back and trigger the stop loss at break even. So this is just a profitable trade, just that the trade was not managed. It was managed out of the previous loss. Okay, but for me, sometimes I push my trade, my stop loss to break even. Okay, it's not just that I'm doing it because I lost a trade. No, I did it because I manage my trade that way. Most time when the price pushed down impulsively, I shift my stop loss to break even so that I won't lose that trade. No matter what the price do, I will not, you know, close the trade in loss. Okay, but unfortunately this one also ended at a break even, so no money made, no money lost, right? So but this is a good entry. Why I'm sharing this is also for you to know that whenever you actually encounter losses, you shouldn't close your chart and, you know, run away. You should also look and see if you are going to see other opportunity in the market to take advantage of. Okay, So that's exactly how this trade goes. I told you guys I'm going to bring back the outcome of this trade, whether it's profit or loss. Okay, and I hope you enjoyed this process and this episode, and I will see you guys in the next one. Bye for now, guys.